Hello D-traders, you are watching a video review of the Asian session. The geopolitical turbulence as well as the US fresh economic reports published at the beginning of the week impacted market sentiment. How did they affect currency pairs and stocks? Watch our video and find out. After a recent drop, the US stock market has been recovering steadily. Major US stock indexes advanced mainly amid a rise in shares of fintech companies like Apple, Microsoft, Amazon, Alphabet, Tesla, etc. It was rather bearish for the greenback. However, its weakness is likely to be temporary. The Fed has already hinted at a more aggressive monetary policy tightening to curb galloping inflation. It hiked the key rate by 25 basis points in March. The next FOMC meeting is scheduled for May. Market participants are betting on a 50% price increase. Fed Chair Jerome Powell also admitted such a likelihood. As a result, investors abandoned risky assets, shifting attention to shares. The US dollar is a safe haven asset, shed losses. The US dollar index consolidated at 95.52 against its main rivals after a three-day rally. Forex analysts believe that there are plenty of factors that may foster the US dollar's rise, namely the geopolitical crisis, sanctions, and their effect on global markets. If so, the greenback is sure to regain ground. Besides, it's still trading at high levels 98.39 and 98.55. The yen showed the worst daily performance yesterday versus its main counterparts. Apparently, it was unable to take advantage of a drop in the US dollar. The main reason in the soft approach of the Bank of Japan to monetary policy compared to the Fed's hawkish rhetoric. Apart from that, the yen lost steam due to soaring US Treasuries, mounting demand for risky assets, and high commodity prices, and are bearish factors for the yen. Japan is highly dependent on the import of natural resources such as oil and gas. This is why surging commodity prices adversely affect both the country's trade balance and its national currency. Meanwhile, the dollar-yen pair has reached new highs. Yesterday, it soared above 121.00, logging the highest level since February 2016. And today, the pair returned to 120.95, trading in the range of 120.76 and 121.41. Its daily gain totaled about 0.9%, which may lead to the overbought status of the pair. While the yen and the US dollar are facing bearish pressure, the Aussie is enjoying high demand. It's climbing amid rising commodity prices and the risk on sentiment. It's less vulnerable to political turmoil in Europe. What's more, the Australian economy is strong. The Australian dollar has already advanced by 0.95% versus the US dollar, and the AUD USD pair rose to 0.7477, having reached the highest level in almost 5 months. Today, the Australian dollar is trading at 0.7475. The pair has slightly slowed down after yesterday's robust growth. It's located near the support level of 0.7452 and the resistance level of 0.7479. However, analysts are betting on further growth amid risk sentiment and the strengthening of the commodity currencies. Today, Jerome Powell is going to deliver a speech. It remains to be seen whether his statements will influence the market the same way they did on Monday. Keep abreast of the latest market news with the InstaForex TV channel and feel free to ask your questions down below. And see you soon!